Welcome to the StashCast, where innovation meets real estate. Let's dive in.
Joseph, thanks for coming to join me today. I really appreciate it. I've been looking forward to this conversation of ours.
Thanks for having me.
Yeah, you and I have had a little bit of opportunity to connect prior to this, but for the folks at home that don't know you, why don't you give us a background of who you are and what you do?
I co-founded Allio Capital. It's a wealth management platform designed for macro investing. And that's the nuts and bolts of it.
How did you decide to co-found a startup company, a fintech company?
I spent a lot of years working on Wall Street, and it was obvious that the industry was retracting. It seemed a game of musical chairs on the Titanic. There was a big exodus into tech. But I also noticed when I got to Wall Street that markets were changing. It was the era of artificially low interest rates, Ben Bernanke, and geopolitics was really driving markets just as much as fundamentals and earnings. I had a natural inclination for the macro climate in general because I came out of school with a degree in economics, poli-sci, and public policy. So finance didn't necessarily come natural to me, right? Like I wasn't a quant, but yet I could understand the direction of markets in that environment. It was very top down, if you will. Bottom up would be more of the Benjamin Graham approach, the Warren Buffett approach, value in companies.
Both of it, the practical,
Yeah, but the top-down approach is looking at things by asset class, sector, and the approach that we really pioneer at Allio is a derivative of the Ray Dalio approach. So that's looking at how markets have moved historically with monetary and fiscal policy in different places and how asset classes respond to those movements, right? There's high inflation, high growth, low inflation, low growth, and you got the discount rate and the risk premium. Based on what those 6 determinants are doing, you could really determine how asset classes are going to move and respond to that. And so that's the approach that we take at Allio, but we've automated that with our AI and made it simple for retail investors to just come into the platform and learn how to build a top-down macro portfolio without having to read a 700-page book.
I think that is really important, especially in any environment. It can be intimidating to try and underwrite a company to determine whether or not you want to buy into the stock. There's so many variables, especially if you're more on the retail aspect of things. How have you helped? How does the platform or what you built help consumers, retail investors?
Yeah, it introduces, let me take a step back.
Yeah.
I think fintech covers a wide range of verticals, but tech within fintech specifically has really been bifurcated between trading apps and robo-advisory apps. Wealthfront IPO'd recently, and they IPO'd at a $2 billion valuation, which was great. But when you look at Robinhood's IPO, I think it was like $32 billion. And I don't think anyone's ever lost money using Wealthfront. It's just a robo-advisor. Robinhood, on the other hand, a lot of people that have tried trading on there have not had long-term success. Let's put it that way. And so I think fintech, it's really expanded access. It's gotten a lot of people into markets, but it's also been able to exploit, I think, the lack of knowledge and understanding that a lot of people, the way people view markets. Trading is not really investing. It's more speculation. Investing is taking a long-term view on markets. It's a scientific approach, though there is an art to it, I'd say. But I don't think fintech has really encompassed that. A lot of people, they gravitate towards that. They want to do it themselves and has that cool factor. But the robo-advisors, they generate consistent compound annual growth for their clients, but they have 1/20th the user base. And so what we were really trying to do is introduce a solution that's a hybrid of that allows people to maintain that do-it-yourself control over what they're building, but educates them at the same time. So it's a behavioral approach to the user experience as opposed to a gamified approach to the user experience.
Whereas Robinhood, for instance, has a much more gamified approach.
Yeah, I think a lot of the trading apps take a gamified approach.
Yeah. Your money, maybe.
Yeah, there's something called the odd lot theory, and it's basically that the retail investor is always wrong. They're always on the wrong side of the trade. And I think in a lot of ways, the access that's been expanded has only magnified that divide between the institutional side and the retail side. And so the idea was to really bring this institutional approach. Like, for example, we have a macro dashboard on the platform, and usually macro dashboards are something that institutions use as a tool. Retail investors typically don't look at data like that. And so we're trying to get them to think along an institutional basis and think how fund managers think when they're constructing their portfolios.
So how do fund managers think when they're constructing their portfolios?
Everyone has a different style, but just in
Yeah.
general, there's a scientific approach. It's not, hey, I saw Apple was crushing it on the cover of the Wall Street Journal, so I went and bought it and added it to my portfolio. Or
Yeah.
my friend that I went to high school with called me up and told me that he just made 30% on this hot stock, so I'm going to go buy it. Because by the time it's out in the news, you missed the trade.
News. Yeah.
Yeah.
Just one day you came from Wall Street and you're like, I want to create a fintech application. What was the transition period like? Or
I grew up in Manhattan, and finance was right there. I was thinking about going to law school, but the allure and the excitement of the world of trading and having friends, it was too much to ignore. And once I entered the industry, I took a liking to it and had to find my niche within it. And so the macro approach, my uncle, he was a trader at Drexel a long time ago, and he had started his own fund of funds. So I had the privilege of being tutored by him. But he basically, when I came out of school, he said, with this degree, looks like you're going to go work for the Obama administration, not come work on Wall Street. And he was teaching me the bottom-up approach and the top-down approach. And the bottom-up approach was really over my head. Like I said, I wasn't a quant, and it didn't really resonate with me. When I started to notice, a lot of CFAs they'd put out these research reports, and they would give these presentations on the research reports, and they'd sound great. And they would talk about these companies. And every time I'd hear them pitch a company, I would say, oh man, I got to get a hold of that stock. And about 6 to 9 months later, I was just paying attention to what those stocks were doing. Rarely were any of them correct. And so where with the macro approach, I was just selecting ETFs and looking at where do I think markets are going, what sectors are going to be favored, what industries are going to be favored. And just by selecting the right ETFs, I was outperforming a lot of those analysts, just tracking stuff on paper at that point. I just had lay accounts, but it just became apparent to me that it works. And I think everybody's got their own approach, like George Soros, Ray Dalio, Warren Buffett, they all have their own approach that they pioneered. So for me, it worked for me. And as I was pivoting into tech, I noticed that fintech was really expanding access and getting more people into investing than ever before. But I felt like a lot of the platforms lacked gravitas, right? They had good branding, good design, but they weren't really driven by veterans of markets, if you will, really building those platforms. And I felt like there was they left a lot to be desired, if you will. That's how I got into it.
that was kind of your aha moment of, oh, okay, I'm seeing all these things, and you're like, all right, let's go build this then.
Yeah, I think the three big events, 9/11, right? And then the Great Recession, and then the pandemic were big catalysts. Certainly, I had just moved to the West Coast when the pandemic was starting, and I was working for a company in tech that was on the East Coast and remote, but a lot of people were starting remote companies, but it also factored into the case for macro investing, right? Because geopolitics was moving markets more than ever. You see it like if one party doesn't have control of the entire political system, no legislation gets passed because there's no bipartisan cooperation. We are in this hyper partisan environment that Galileo compares to the 1930s. We're going through this change in global order. So I think the natural progression of things has worked out that we really have time on our side, in that everybody's paying attention to Bitcoin, to gold, to dollarization, to Trump and what's going on there. But what I don't think a lot of people recognize is that the solution, right, because you're not going to be able to control the system, is to position yourselves to take advantage of these changes that are happening in the system. And that solution is macro investing.
I had a call. I haven't released it yet, but a podcast with a gentleman who was talking about the tokenization of assets. I'm just curious, it's off script, but I'm just curious to get your thoughts on that, because I can see, okay, you've got coin as a leading example of it. Then you have the blockchain, which creates a durable record. You've seen many of these firms that maybe just either they're along the side of the road, broken down companies, or they just haven't gotten traction. Have you paid any attention to that or no?
I was reading a little bit about it when they first started introduced to it, maybe about 4 years ago. There was a big fund that was really bullish on this. I can't remember their name. Was it Satoshi? It was a Japanese name that is slipping me right now, but I haven't paid attention to it closely. I thought it was interesting. I think there's a utility case for it. Not sure what the cons are yet though, and I'd be interested to learn more about that rather than just the benefits.
Yeah.
The StashCast is brought to you by Needle. What if you could use data and analytics to predict real estate transactions? With Needle, you can. Check it out at needle.us to learn more.
Yeah, I don't have an index of what the cons are, but it's interesting because I've seen it come at from the angle of commercial real estate, people wanting to tokenize ownership in commercial real estate properties. And I think from a lender's point of view, like, who is your sponsor if it's all tokenized? I think, and so there's some risk in that, I guess, from the lending standpoint. And then who's to say that there won't be just bad actors as well? I think that's one of my biggest concerns about it, maybe. I don't know. But
Yeah, I think there's the efficient market hypothesis, right? If markets were really that efficient, then it wouldn't have all the players that partake every day. If it was really as efficient as the efficient market hypothesis claims, right? There's a healthy level of inefficiency, I think, is good for markets, right? Because it allows for competition. And I think competition is great. So that would be my concern, because efficiency always sounds like a positive thing, but I just would be concerned of where the concentration of power lies within that. I certainly can't speak to it on an expert level or anything like that.
yeah, the concentration of power. I guess back to your firm, how did it go when you were initially setting out to go raise capital? What were those conversations like?
At that time, there was a lot of money flowing into startups, seed round companies, and fintech was hot. And the pandemic happened, so a lot of people were starting companies. I did 3 accelerators because there were that many at that time. People just really trying to get a foot over into the startup world because people were reading about all these big companies, these unicorns, and thinking that a lot of the headlines make it seem way easier than it actually is. But I think at that time, a lot of people were chasing it and there was a lot of money flowing. So we were able to get some capital just based on that. And we've been fortunate with our lead investor that he's carried us a long way. And now the product's really starting to pay dividends because we're seeing it grow pretty significantly on a week over week basis, not even month over month. So yeah, other than that, I think it was just the timing of it. At that time, even the seed rounds, like the amount of money they raised compared to what happened after the Biden election, particularly in my space, everything really just started to freeze up and there was very little capital flowing into the space. So when I say it was a pretty easy money time, comparatively, things were really dried up between 2020 and 2024. And that really worked to our advantage because during that lull time in the industry, we were able to continually stay building and keep our eye on the prize. We pushed for a patent on our AI and we were really able to build this great platform when a lot of other companies just decided to turn it in because people didn't know how the last election was going to go. And if we had continued on the path that we were on, it was going to have implications for risk taking. You had a very hawkish SEC for those 4 years. And so it was not the environment that we have today under Trump. Let's put it that way. If I was looking at this past election that came up because we just launched in June, but had Trump not gotten elected, I'm not sure that we would have continued on as a company just because the environment it just wasn't there. You have to be in a risk on environment, right? Like you need a rising tide for a lot of the smaller boats to get traction and establish a beachhead. And yeah, that's the best way I can answer that.
Yeah, that makes sense. So how did you find or align with your lead investor?
I went through a couple of accelerators and there were a couple angels there that were interested. I was reading a lot of books. I joined a couple social networking groups that had a lot of funds that were a part of it. And I'd watch startups pitch and I would review the term sheets and things like that just to learn and see what other companies were doing and all different verticals, not just the fintech. And, but yeah, so I just set out to think, how was I going to value my company? How much was I going to shoot for? What was it going to take to get where we needed to go? And then once I had a few people interested, somebody that I knew from the East Coast, because I had moved out to the Pacific Northwest from Manhattan, they were interested in getting into fintech and had been for some time. And so it just aligned that we were the right people at the right time. And I will say, though, none of my projections were correct because within the rise in inflation, the cost of human capital went up exponentially. And just the lull in the industry in general was a lot more costly than I think anyone could have anticipated.
So how do you deal with those challenges when they arise?
Well, there were a lot of times when I was not sure that the right thing to do was to keep going. When you're starting a company for the first time, you have to deal with a lot of not just market demons, but personal demons, imposter syndrome, things like that. And so when you're in an environment like that, a hawkish regulatory environment and record inflation and no leadership on the political front for the country, just looking at our country, we seemed to be a declining empire whose best days had been far behind us. And so you look at that and you're just like, we're really going to be able to have success in this environment. So you question yourself a lot. And I will say, to the credit of the lead investor, he was the one that really inspired us and pushed us to keep going. And now it seems we've caught timing perfectly, because people are aware, whether they might, like I said, they might not know macro investing is the solution. When Trump and Elon have a spat and then markets take a dive, like, that's geopolitics moving markets, right? When the
Yeah.
big, beautiful bill passes and the market rallies and hits 2 new record highs, on the S&P, that's geopolitics moving markets, right? Like, when Barack Obama, when they passed Obamacare, right? And then all the insurance stocks went up. That was a form of regulatory capture. That was
Right.
geopolitics moving markets. And so people are aware of these things. Gold having the year that it had in 2024 has a lot to do with the increase in debt levels, and people are paying attention to that. People are aware that these synergies are out there, and the solution to navigate it is really like macro investing, like I said, because it's a way that you can set up a defensive portfolio, but you could concentrate an area of high conviction where you see growth, and still generate consistent alpha, but be properly prepared if a black swan event happens, that you're not going to lose the compound annual growth that you've built over the past 7 or 8 years, however long you've invested, in 14, 15 years. It's really predicated on the correlation between asset classes, right? And building a robust portfolio that has a combination of risk on and risk off assets. But you look to keep like I said, a high conviction, high concentration area that's favored by the current fiscal and monetary policy environment.
Yeah. Do you foresee a day when your financial advisor will not be necessary because there's platforms like what you guys have created? Or I guess, will AI replace our jobs, specifically in the financial advisory sector?
I don't think it'll replace asset management as we know it, but I do think financial advisory will look a lot different than it has previously. And what I mean is that there's still going to be a lot of big institutions out there managing money, because they have a lot of the capital and they're going to buy the best technology. And even in wealth tech, yeah, you have platforms like ours, but there's a chance that a lot of companies like ours also get bought out by the big players over time, once the industry does consolidate. And trying to put this in a positive way that doesn't disenfranchise financial advisors.
I guess my take on it is that AI and the tools that we build, softwares, are meant to be just that, tools. And I think people still want to be able to deal with people, where there's certainly always going to be a subsector of the population that prefers to have a conversation with somebody as opposed to just logging into a dashboard.
Yeah, for sure. It's a lot like a personal trainer for many people. As far as how much domain expertise and how much of an advantage can a financial advisor actually provide you when it comes to performance, I don't think any. In fact, I think, if anything, it would be a disservice just on a performance basis. Now, there are other ways they can impact performance. For example, just getting you to not make impulsive decisions and getting you to stay the course and be consistent. Some people just can't do that on their own. They need that coaching,
Right.
they need that hand holding. And so that's where I see financial advisors continuing to provide value. But when you look at the fees that some of the big institutions charge, 1%, what that does to your compound annual growth, when you can easily learn how to do these things yourself, and you'll be better off for it. Because, yeah, I just think that it's going to be the last space that really gets taken over completely. And what do I mean by that? Just in general, money. Like, I think there's a good chance that this money goes completely digital, and it's going to be the last frontier for transformation. And so it's just, for me, it's hard to imagine knowing what's likely going to happen after we have a currency crisis, because we're going to have a sovereign debt crisis at some point in the world, right? And we're going to move to some new system, I would say, within the next 3 to 5 years. Knowing that's going to happen, it's hard to imagine those guys really, and just knowing how much you can learn, how much is out there. The whole reason for the industry to exist, financial advisors, because prior to 2005, right, you couldn't buy a stock or a bond without going through a broker. So that's why the industry was there. Now that you can just plug into an app and do it yourself, you have to think, is it really worth giving somebody 1%, which could be 30% of your compound annual growth over the course of 30, 40 years, is it worth giving up a third? Are they that much value? But for those that have so much fear that they're not doing it at all and they need somebody to hold their hand and get their feet in the water, I guess it does have value.
I have two questions that you've spurred in my mind. One is map out what a theoretical currency crisis might look like.
Yeah, how it might show up. It looked like, meaning,
Yeah. We don't.
our day to day, will ATM machines
Yeah,
stop working?
what's going to bring it on, and then how is that going to? What are the changes that you foresee might happen?
Everyone talks about debt and the debt levels, and I don't see us ever paying that debt off. And that debt is global, right? And there's a lot of countries out there that have a lot of debt besides us, but the US really drives innovation throughout the world. It's pretty clear that the BRICS countries want to challenge our dominance, and more countries have been moving away from the dollar, de-dollarization. And I think as that debt continues to climb, that trend is likely to continue. And when you look at, for example, this whole thing, Ukraine, Russia, right? We see that happening, and we saw what happened with Iran. But when Trump went and visited China, Xi Jinping said to him, made a kind of tongue-in-cheek joke with him that he wouldn't attack Taiwan while Trump was still president. But he said, but we're very patient. China's very patient. At some point, they are going to go after Taiwan. And so when you look at that and you look at what's happening on the global stage, these wars, but then at the same time, this battle for dominance, who's going to have the most vibrant, dominant economy? So for me, it could come down to, I hope it doesn't, but it could come down to an actual war, because China is obviously, they're building tons of ships. They're really trying to assert their dominance past Japan, where they previously wouldn't go past some of those outer islands there. They've been sending their ships past there into parts of the Pacific that were previously off limits to them, trying to test the waters. And I think as these debt levels become unsustainable, something's got to give. I can't see the Eastern countries just allowing the U.S. to continue to dominate. And it's up to us in a lot of ways to hold on, right, to our dominance. But I don't see us. I think we got and I'm not a member of either political party, by the way, but I do think we lucked out with the Trump presidency, because because of where things are on the world stage and because of what's going on, I think he's the right guy to take that on and to really approach our country and run it like it's a business. And I think that's necessary. But with the path that we were on, if you go back to the Biden presidency and you look at what that was projecting on the world stage, and the fact that I think with the exception of the Marines, none of the branches of the military were meeting their recruitment goals. If you played that out over 15 years, it would be hard to make a case that the U.S. would be the dominant superpower if it had 15 years of those continued policies.
Growth.
So when you talk about the currency crisis, I mean, if more countries continue to move away from the dollar, how do we back the dollar? With our military. That's why we invest so much in the military. It's not backed by gold. So how this plays out and what's going to happen the day of, I don't know, but I see it as inevitable. Looking at it from a positive lens, hopefully it won't result in an actual physical war, and it'll just be a political war, and some solution will be put in place. That's I don't know, maybe a North American currency and a European. You already have the EU and maybe a basket of currency, something like that. If it's not, but then obviously there's the bad case, which would be World War III and probably threaten our survivals. But yeah, I think this is the last frontier, if you will, and it's got to come to a head.
Of China, and I don't know the answer to this question, and it seems like you're much more well-informed about this than I, but for instance, if China owns so much of our debt, what happens if we just say, we're not going to pay you anymore? Does that then shoot us in the foot with everybody else? Because then somebody else is going to be like, why would I buy your debt? Because you might just choose to default on me too.
Yeah, exactly. It would lose its ratings, right? So it wouldn't be, and it's already been downgraded to a degree, some of our debt, not significantly, but traditionally the U.S., anything. But
like if we're in a war with China, if we're in a war with China, why are we going to continue to pay them debt payments if they're trying to fight us?
That was one of the cases for globalization, that if the economies were completely intertwined with each other, these global economies, they would be less likely to end up at war with each other.
Yeah.
But if you look at history, prior to World War II, the pound was the dominant, England was the dominant country, right? They had the dominant currency, and they were so beaten down by Germany with all the bombings and beyond repair. So all they had left was small Navy and some Air Force at the end of World War II. So they couldn't really backup there. There was this huge vacuum and the US was happy to fill that, right? And we've been the dominant player since. But if you look at it, Allio talks about in his book, the world has gone through these cycles,
Yeah.
right, of empires. And
Yeah.
every empire that's ever risen has fallen. And the US is at that point now, and China seems to be the empire that's rising. And so it's almost inevitable that we would come to a head. And I think when this Russia-Ukraine thing, Gaza, everything that's going on in Gaza, and then you throw China's eye on Taiwan, it's a pretty ripe environment out there.
The other question I had, which I think you've addressed, but would you say that we are still a nation in decline, or given the shift of the last presidential cycle, has that offset it? Cured it? I don't know.
I would say it's somewhat offset. It is not cured it because it's unfortunately some of the cultural malaise. It's ingrained. We seem to be going through this fourth turning. The values that really made the American empire are no longer ubiquitous with the younger generations. It's this idea that you can go out there and build anything and create a great company and create lots of jobs. But to some extent, you look at a guy like Elon Musk, right? And he's vilified, right? Or even Sam Altman. These guys are, some people celebrate them, but I think a lot more people vilify them. I don't think but I think when you look at the trend in our education system, right, is not moving in the right direction. That keeps going in the wrong direction. And that is directly correlated with innovation. And innovation is correlated with production, and production is what creates wealth. The Trump presidency is doing, though, is that they're deregulating, right? And we've gotten clarity on the fiscal side with the big, beautiful bill. They consistently deregulated. They're trying to get back to energy dominance and energy independence. And there's no reason why the U.S. should import in its energy when we have such vast resources here. But when you look at some of the silly policies that were being proposed by the left, historically speaking, they have not worked out. And so I just don't think, now, obviously he's had 2 terms, right? But I think the interruption between those terms, by the time he gets everything cleaned up, we got to see how it looks and whether or not Vance or Rubio is going to be able to carry. Because I just don't think 4 years is enough to completely, it's like you have these 2 sides battling, and each term is like and the trajectory was heavily favored by the other side in terms of momentum after the Obama presidency, right? The Trump presidency was unexpected, seemed to be a blip, an anomaly, and then he made this comeback. And now, hopefully, people will start to, that's one of the I would say, externalities, if you, for lack of a better word, that come with macro investing, is this, people will have a better understanding of macroeconomics and how macroeconomics are, factored into the policies that they vote for, and how it affects not only their daily lives, but how it's going to affect their progeny. Because I don't think enough people vote on economics. They vote on emotions.
Right.
But at the end of the day, our economic freedom is a prerequisite to our political freedom. So these vibrant markets that we have are a big part of what makes us Americans. And if we lose that and we take away the fundamental mechanisms within the system, like long-term capital gains, for example, you start to take those things away, and the system starts to really lose its allure and its power. And I think that would have drastic implications for our standard of living because of the way it would affect innovation. I think that cycle has already started to happen. We'll see if this presidency is good enough that they can get some type of sustained momentum going in the right direction and maybe get us back to a country that's somewhere in the middle as opposed to extreme left or extreme right.
Do you think the decline of the traditional media platforms, which I think are responsible, at least in part, of that polarization, and like I just have a Zoom and a mic and I started recording podcasts, do you think that things like that will help democratize the opinions of things? Because you hear these things about all the local news stations reciting the exact same monologue. And you brought up Sam Altman and Elon and the vilification. I feel like a lot of that is due to we'll call it the mainstream media. And I want to be clear, I'm a middle of the road kind of guy. I think you and I are probably similar in that way. I did vote to make America great again this round. And I do think that the pause of 4 years was a positive because it gave him time to sit back and reflect, which I think you said. But I don't know. I guess let's just expand upon that.
Yeah. Corporate media, I think they're job is to manufacture consent or dissent. Look what they did during COVID, right? And it seems
Right.
that there's always a protagonist and an antagonist. And what you get out of that is like this Hegelian dialectic. It's thesis, antithesis, and synthesis. You maintain the status quo. But I'm a cynical guy saying that, right? But a lot of the control was in the hands of very few of these companies like BlackRock and stuff like that. They seem to have ownership in everything and just have this dominance over the system.
Yeah.
The saving grace, if you will, if a lot of stuff was planned, right, and it was all part of the plutocracy's agenda, it's very hard for me to see the Trump presidency as having been planned because he had to buy Twitter, right, and turn it into an X in order to, in a lot of ways, potentially he saved democracy, right? Because there weren't many platforms out there where people were able to have free speech and discourse. And
Censored.
you really can't have a republic, a functioning democracy without that. And I can't imagine that was part of the plan, right? Because you have these, it seems like you have these different factions out there, right? And I think the globalist factions, the George Soros, the Rockefellers, there's the Rockefeller Brothers Trust, which lives on to this day. There's still a lot of those globalists factions out there. I think something was definitely happening. You know, when you look at the Trump presidency, when the first time around, the way John McCain and the Bushes, the way they received him or didn't receive him, clearly it's almost as if there was a uniparty, just a globalist uniparty, and the people had been left behind. Now you actually have this opposition, this whole MAGA movement. There seems to be a grassroots movement to do what's in America's best interest that has this nationalist approach. And how the corporate media plays into that, they're never going to be fans of Trump, but they seem to be giving him a little bit more rope this time around because I think they realize with all the podcasts that are out there, all the independent media, they don't have a monopoly on information the way they maybe did 30 years ago. And they're just trying to figure out how to survive in this new paradigm.
Because they are an effective kind of mass market mouthpiece for whoever's agenda that they're pushing. What is your take on the tariffs? I'm in Cincinnati and they're putting an iPhone screen manufacturer in Kentucky, which is right there, right across the bridge. Like that feels like a good thing. There's been some other auto manufacturers that have decided to build, I think Honda is one of them, or Nissan. I think they're going to build the Honda Civic in Indiana as opposed to building a plant in Mexico, which granted is just over the border. I've seen that tax collections from tariffs have gone up and maybe that helps pay off some of that debt. I don't know. It's tough to say if we'll ever get to zero, but.
Yeah, I was reading the other day that the tariffs are, I want to say, third biggest moneymaker for the government right now. It's basically the revenue on those tariffs, and who would have foresaw that? They haven't seemed to have led to the inflation that they were fearing, but I think the jury's still out on that. We got to see what happens on this deal with China. If we get a deal with China, that's the elephant in the room that really is going to have to be decided before we can see how things played out. But I had confidence in Trump just from the first term that he was going to go in there and try to do the right thing and bring back strategic manufacturing. Do I think we're going to go back to the America of the 1940s and 50s? No, but I think we shouldn't be manufacturing our antibiotics in China. That's clearly a national security risk. And certainly the things that are most crucial to innovation, we don't want to send over to China because a lot of what they built has just been from copy.
The same thing.
And we've literally built up their entire infrastructure, built up their entire economy. So as we've gone this way, they've gone that way. And hopefully with all these trade deals and America being the place to invest once again, like I said, I just don't think one presidency though is going to be enough. Things will have to be, things aren't going well. By the way, so like once we get a rate cut here, you're going to have monetary and fiscal policy in sync with each other. And it's going to be a huge boon for markets. I'm super bullish on markets right now, especially over the next 12 months. I think the question is something going to go off the rails in the next 3 years for the 28 elections. But if not, if we have this booming economy and if young people are starting to get back into the home ownership market, because if rates go down, then maybe more people will start
more
making
affordable.
mortgages. Yeah, we're going into our 250th anniversary. So if things are really booming as a result of Trump's economy, then that should really favor the incumbent and J.D. Vance or somebody like that. And then you can truly get politics of reconstruction because you'll have two back-to-back administrations cementing these policies into place.
Right.
But if something goes off the rails, right, it would lead to the other side getting power back, and they would undo a lot of their stuff that's been done via executive order, and we'll see. But certainly, I think things are moving in the right direction. I just think it's going to take a good 6 to 8 years of consistent, because even now, right, like there's still this light recession in the real estate market, right? Even though the stock market's hitting these all-time highs, right? There's other areas that aren't moving at all. And so I think you can only really tout the economy if the economy is working for everyone. But hopefully this is the beginning of a turning tide. And with the market booming, the labor market will pick up, people start buying homes again. And then people will start to be like, okay, this is what it means to be America, the land of opportunity where I could be anything I want to be and have anything I want to have.
It's tough.
Yeah, when that guy Mandani, when he won I guess it was the primary, and I seen all those kids dancing in New York and celebrating for socialism. I remember watching the Berlin Wall come down, and the way we celebrated, that generation that was dancing that day, they never saw the Berlin Wall come down. I think my age group was probably the last to remember that. I think I was about 7 when it happened. It's just amazing. I never thought we'd see people celebrating socialism to this extent in the United States. But if they don't have any ownership in the system, then why would they seek to preserve it?
Yeah.
So I think that's what's at stake.
Yeah.
If they're not able to turn the tide and get things back to, say, where they were after Reagan, for example, like Reagan came in, right? And you had 2 back-to-back solid presidencies. Then you had 12 years of those consistent policies. And even after that, that set the stage for the Clinton presidency, just governed from the center. And that's what I mean about having years of consistent policies, keeping the economy moving in the same direction, as opposed to these two sides with nothing but hatred for each other, vying for absolute power, because one of them was going to get it. And if the other side gets it, I don't think the other side will ever get it back.
Here's a fun question. And it's something I've always been fascinated with: ancient civilizations and rise and fall of Rome and empire, essentially. So the question is, if you could go back 10, 20,000 years in time, or forward that same amount of time, which one would you do?
Back.
Me too. But why?
Caveat. Could you know everything that you know now, or would you have your mind wiped?
Yes. It would be you in your current form able to go back. Maybe this will be a new theme going on, but are you just an observer, or are you able to enact some changes? So are you able to butterfly effect? Are you able to change history? Like Back to the Future?
The reason I would go back is because, and I'm not an expert on man's entire history by any means, but it seems when you think of just the past 20,000 years at a high level, certainly the furthest I would even think of going back is to the Enlightenment period, the Revolution. And I don't even think I would go that far back. I think I'd probably go back to the 1950s through the 80s. And the reason why is because I think those were the peak years for mankind's evolution. And I say that because the scientific method, the Enlightenment period, really unleashed man's innovation, right? Like the animal spirits. And that's when we started to build and create. And the standard of living really started to increase. You look at the United States and the Constitution, I see it as a minimum viable product, right? Like they came out with this idea, this experiment. They got these 13 countries together, but then they ended slavery, and you had women's suffrage, you had civil rights. But in the 20th century, you really did have this equilibrium period where there seemed to be a general high level of freedom, a high standard of living. And I don't think at any other period in history did you have that. It seems like it's always been power and wealth concentrated at the top. And the bottom 99% seem to have suffered. And I think moving forward, it's likely to go back to where it's historically been, just because you look at post-labor economics and the way that capital is going to be concentrated and technology is going to be concentrated. I think the interesting part about the future is that as human beings, there's relative happiness and there's absolute happiness. If you're looking at it on a relative basis, for example, like a homeless person today has a higher standard of living than a pharaoh in Egypt. And like maybe everything's going to be easy and convenient and people will be able to get by without owning property and stuff like that. But because most people perceive their happiness as relative, I don't know if you're not going to have mass depression and just a lack of feeling of like what everyone has to have a call on. I feel something that them feel worthwhile.
Something to get up
Avenues
and that brings you passion.
yeah, exactly. Unleashes his innovation and his energy. I certainly think we had everything we needed, air conditioned, heat,
Yeah.
cars, but there was this, I know it was cool about the 50s, 60s, and 70s, but there was a lot of surprise, right? The new song came out when it made the top 10 or something like that. It was like, oh, and you wanted to drive around in the car so you could hear that song. There was no
Yeah.
element of surprise. Going out to eat, going to the movie theater and seeing like Jaws when it came out, or like
Right.
Star Wars, that was a big treat. And so that's why I prefer to have spent the majority of my time in those decades.
Yeah, that's a great answer. So I guess to expand upon a little bit what you just mentioned, I feel like people do need a reason to get up and do something every day. If, the solutions like we're trying to build, making life automatic, perhaps. Do, if, say, financial advisors are displaced, and that's a large sector of employment, do we then need universal basic income that would then allow people to go out and create art or be farmers? So I don't know.
Yeah, the problem with UBI, and just not to go off on a tangent, but I don't see how it wouldn't also be inflationary. And so, what is the buying power? I can't see there being a form of UBI that allows people to maintain a level of subsistence that would be worthwhile and allow them to not feel completely shackled by the system. Like, in other words, like I don't think there's any level of UBI that would give people that can replace freedom. I think independence and productivity and the ability to learn and produce, that's a big part of the human experience. And I
And
don't know
this
that
life
UBI
is,
could replace that. I just don't think it could. But traditionally speaking, it's also, look what happened during COVID, right? They gave all that money out and then
I
it
was just
caused
going to bring that
inflation.
up. Yeah.
So yeah.
Yeah. From the real estate standpoint, rents went up significantly. Collections went down for a time period. But then anecdotally, you saw a bunch of new big flat screen TV boxes out at the dumpster because that's what people went out and spent their money on. It's an interesting question. I think that the tool of AI is just that. It's a tool, and it used appropriately should be able to improve. We don't have buggy whips or slide rules anymore, but those jobs have been replaced by new ones. We're going to find out one way or the other.
Yeah, when they talk about self-driving cars, and by the way, I know they already have them and stuff, and they have the deliveries with the little robots in Austin and stuff. I have two thoughts on that. One is, what level of greed makes the, what? Because if you look at like the payouts in Uber and Lyft, right, and or even if you're talking about trucking companies with CDL drivers, the house still has a massive advantage compared to what they pay the drivers. But if you take away driving as I think it's the fifth largest employer in the country. And so you remove that, the labor force participation rate is going to go down drastically, right? And so now you remove all these people from the workforce. But the second part of it is, as a consumer, why would you want to get in a car that's driven on autopilot?
I like driving a manual. I haven't driven one in years, but it's great.
Yeah, I'm just saying I wouldn't want to give my money to if Uber had no drivers in the cars and it was just completely automated, because it would say something happens where like you had a 5-minute wait time, for example. Like, what if it's 5 minutes and 22 seconds? The robot isn't going to give you the extra 22 seconds. The driver will, though. And just there's the conversation, the interaction. I'm not sure why we're trying to go that far. Like, why are we trying to eliminate ourselves? Like, what level of greed is driving this that we want to basically, it's like, I don't want humans to go the way of the horses, right? When cars came out, right? Yeah, I looked at like how the longshoremen, when they were renegotiating their contracts, one of the caveats in there was they didn't want any new contracts to include automation that would eventually potentially replace them. And I can understand why they were negotiating around that. And it's unrealistic that they don't want to have their jobs replaced by automation. I understand the efficiency argument. Then there's a level of efficiency that's actually inefficient because you're talking about such extreme capital concentration. The argument I would make is that if you're looking at efficiency from a production standpoint, okay, fine. But if you're looking at efficiency from the standpoint of parity and avoiding revolution, then you take the other side of that trade.
Yeah. You mentioned a little bit about BlackRock and how they're involved in so many things. And what is it? BlackRock, State Street, and Vanguard. I'm sure there's two more. And then you look at large companies like Meta and Google. Do we need another era of trust busting? Like a modern era of trust busting to break up some of that capital concentration?
Who's going to do the trust busting?
Who are the right people to do it, and what interests are behind them?
Teddy Roosevelt was one of a kind. And
Teddy Roosevelt, is Donald Trump the modern day Teddy Roosevelt?
I wouldn't go that far. Different personalities. I think they both have look, they're both within, in my opinion, top 10 best presidents of all time. You can make a case for both of them being within the top 5, but I do think they are a little different in that Teddy was much more selfless, less narcissistic. And I say that not as a knock on Donald Trump. There's other areas where Trump has more strengths than Teddy. But I think Teddy's mentality that he had to look out for the little guy, and I think that was really noble.
The common thread between the two of them.
Yes. Yeah. It's just hard for me to foresee Trump taking a sledgehammer to it. He would probably just want a way to restructure it and grow it. Because I remember when the longshoreman thing happened, when those guys were on strike, and Trump was saying that he was siding with the workers. But, and Elon was there as well, like I said, and he was saying, but this part about not wanting to get rid of automation, it's a little unrealistic. Trump didn't make a comment on it, but I just wonder how Trump would be able to handle that. If you had all these tech barons, right? And then you have all these people on both sides of it. I'm just not sure that he would be able to take that approach. Seems like anytime he's going to take on a company, he finds a way to get the company to do business here and make the company better and improve it. But I can't see him completely breaking companies up and putting them on the other side of the river.
Yeah, it seems extreme today to talk about it, but it did happen. They did break up Standard Oil, and those folks are still legacies. They've got the Rockefeller brothers trust. I don't know. I definitely don't.
Yeah, I wonder with Trump, like the whole globalist, right? Like the whole anti-globalist thing, nationalist thing. But with that, does he really believe that? Because look, we accounted for 50% of the world's production at one point. That's what made America so wealthy, is that we had the people, we had the human capital, we had the natural resources, right? We had the education system. We had everything here, and the rest of the world was just basically black. You had Europe a little bit, and then you had the U.S.
But they were recovering. Europe had been decimated by 2 world wars.
Yeah, but I'm saying like the U.S. going even through the 19th century, just what we had at our disposal, in this system. And it's pretty amazing that we were able to lose a lot of that. You bring up the Rockefellers, they were really the ones to really push globalization. They were the pioneers of it. Rockefeller II, I remember, what was it? I watched a documentary on it, and he had taken trips, I think it was Africa and South Korea or Japan, just putting feelers out there, seeing what kind of cheaper labor might be out there, because they were having all these uprisings in the mines and stuff back home. And they would have to send the federal government in there to shut down. This was the labor movement, right? Like the early days of the labor movement. And so when Trump set out to really end, but did he really want to take globalization, get us back to the point where all production was here? Or was it more of just a rallying cry for populism to bring some strategic manufacturing back here? I don't know the answer. It seems, to me, it's hard for me to imagine that he really believed that he would be able to bring all the supply chains back here and have everything done in the United States, because that takes a lot of time, a lot of planning.
It took 30 years to get to that.
Yeah. So to me, it was more of a leverage point for him to start negotiations just to get things back in our favor. But taking on globalization, that's a big challenge. So trust busting, that's what I mean, the same angle. Would he really be able to take this approach that, hey, we're going to go break up Google, and without worrying about all the other ramifications? I think there's other bigger fish to fry right now for the administration.
I agree. How do you start your day every day?
With a prayer, actually.
Do you?
Yeah.
I love that.
Yeah.
That's great.
I used to do meditation, but when I started the company, my brain just kept going and going. So about 6 months ago, I started going back to just starting with prayer. Eventually, I'd like to incorporate a meditation in there. But for now, I just get up and I say a quick prayer and eat my breakfast, and then
off to the same day. One every day?
Yep.
I love that. So how do you get the energy to get up and run 100 miles an hour every day? You keep pushing this. Is it just the people that you've surrounded yourself with?
That's a good question. I really don't have an answer to. It's like when you start putting together a really complicated puzzle, I've watched people start with a couple of pieces and then the puzzle gets big and it's covering the whole table, but they're still looking for pieces. They get so into it, but they can't stop. And they just sit there for hours and they can go to sleep, wake up the next day and go back to it, still trying to
Mhm.
put it together. And I think it's one of those things because it starts out in this nascent stage of emptiness. There's nothing there. And then you start building and you have a vision of what the final picture looks like. But then there's this
Mhm.
journey from one brick to the entire city, right? And so it's, if you know what the city's supposed to look like, it's just intuitive to get up and start putting more bricks down and more bricks down and keep the thing going until there's a reason not to keep doing that. Because like I said, being productivity, I think is an important part of being human and feeling a certain sense of self-worth and self-awareness. And so I think that's what keeps me driving, that I feel fortunate to be working on something that, and there's a lot of different things I'm passionate about, but I think I'm just the kind of person that I would have to be working on something no matter what to feel fulfilled as a human being. And so I try not to take that for granted.
What has been the hardest part about being a founder, and how have you dealt with it or overcome it?
Man, it challenges your mental health for sure. It's really difficult. Time is so precious, and yet you need time to recover. You need time to gather your thoughts and show. Trying to find that right balance between being taking enough time off to give your brain a chance to recalibrate and not running on fumes, but not so much time that it's going to affect operations or the production of the company.
Yeah.
And that's been a challenge, though. I will say that I have struggled with that. And I just think in general, like I said, and beyond, that's more of on a micro level, like personally, it's been the biggest
Yeah.
challenge. But I think on a macro level, I just think the culture has changed. I don't know. I'm on the borderline between Gen X and like millennial, right? But when I was a kid, the generations before me, they were very ambitious and aspirational, and whether they wanted to go to Wall Street or they wanted to become a doctor or start a business. But it was like that was the American thing to do, right? We were a capitalist
Yeah.
country, right? People loved Reagan. There was no talk. Even the people that were Democrats, they were capitalists. In fact, some of them were the biggest capitalists, the limousine liberals. But there was never this culture of complacency and what's that?
The woe is me sort of thing. Oh, like almost defeatism.
Yeah, like this, I don't know, this culture of complaining. Everyone gets a trophy, and like that's not exceptionalism, and that's not. And it seems to have it's really taken root and taken hold in our country. And so going up against that on the macro level, like running the company and having to worry about how you filter everything and how you say everything and how you interact. I don't think that was the case. Like when I came into the workforce, I remember my first day on the trading floor, people were cursing and football flying over my head.
Yeah.
And it was just a crazy environment. That's not the world we live in today.
It's not there anymore. Yeah. Joseph, this has been awesome, man. I've really enjoyed our conversation. Um, I guess if somebody is interested in trying the platform, how do they get there, or how do they get in
Yeah.
touch with you maybe?
Allio Capital, Allio Capital, alliocapital.com. Check us out in the App Store or Google Play. And I'm on LinkedIn.
Awesome. Thanks so much, man. And I hope you have a great rest of your
Yeah.
day.
Thanks for having me, Stash. It's been fun.
That's it for the StashCast. Subscribe, share, and stay ahead in commercial real estate and prop tech. See you next time.